are going to start and get things rolling. Hopefully we will have attendees coming in. This is a fun time of year. We're at the end of our first half of classes and midterms and all that. So if nothing else, we're recording this for posterity to be used in other situations. So thank you very much, all of you, for joining in. Hopefully this will be, I don't know, entertaining, invigorating, some word like that for at least us. What I'd like to do to start off is introductions. And I should probably introduce myself if anyone doesn't know me. My name is Karen Nicholas. I'm an assistant professor at Boise State. I came to academia late in life. I actually finished my PhD just under 3 years ago. So before that, I was a business owner and did all sorts of stuff. This is about my 4th or 5th career, and I love it. So it's wonderful to talk to you. I'm new to Boise as well. Never been to Boise before starting this job. And I'm, as part of this WiE program, the Women in Entrepreneurship program, I'm really getting to hopefully understand and be more aware of the Boise ecosystem for entrepreneurs. So this is a big passion for women entrepreneurs and for all entrepreneurs. So each of you, if you could just do a little short blurb about who you are, what you do, and how you got here, and you can define here any way you'd like to. I'll probably go to Karen first, just because she was first in, and hey, how could I not know her name, right?
Well, thank you. It's really wonderful to be here today. I'm Karen Appelgren. I'm with the Idaho Department of Commerce. I'm the Business Retention and Expansion Program Manager, and I started with Commerce just in mid-September of 2020. Prior to that, I was leading the Zions Bank Business Resource Center, where I provided one-on-one business consulting to startup entrepreneurs as well as established business owners, and worked a lot on helping clients with their financing options. And then prior to that, I worked for the Women's Business Center, one of the earlier innovations where I was also counseling and really focusing my counseling practice, helping women in particular. So Commerce is a state agency funded by taxpayers, and we have many different programs, including 2 funding programs that I'll mention today, to help businesses to grow and be successful. And then we also help communities to thrive. So there's a lot of economic development activities we do so that there's that a great place for a business to grow and find workforce, and there's that synergy between community and companies.
Excellent. Excellent. Yes, someone that you are someone that everyone should know in the business realm. Denise, would you like to go next? Oh, and I didn't say this up front. Shameless plugging is totally supported. Okay, so I always feel with business, we have to have the quid pro quo. You've agreed to come and speak for an hour, which is greatly appreciated. So anything we can do today in this moment or in the future, but yes, shameless plugging, go for it.
I think she said that because I happen to have both of my logos behind me. So thank you for permission. I appreciate that. So hi, everybody. My name is Denise Dunlap, and I am the co-founder and managing partner of both Loon Creek Capital and Sage Growth Capital. And what Loon Creek Capital does, this business has been around since 2010, and we provide administrative and consulting support to angel investors all over the country. And so that was born of my experience being an angel investor in the local community. And we formed our entity as a way to provide professional administrative services to our local angel groups. And then over time, we've evolved that to supporting angels all over the country. Sage Growth Capital is a newer entity that we formed in 2019. And what that entity is it's a fund. We invest in companies. And so we aren't doing traditional, whatever that means, equity investing. We are doing revenue-based finance, and we could talk more about that. But we started that as a way to increase the number of funding options available to entrepreneurs. And we mainly started it because of our experience here in Boise And being a secondary or tertiary market, it was very difficult to find funding in a lot of cases. Meg can talk about that. And we wanted to add to the options for entrepreneurs that maybe a traditional equity path didn't work for. So that is Sage Growth Capital. I have been in Boise since 1989. I'm a graduate of Boise State University, College of Business and Economics. I have a degree in business management, entrepreneurial option, because that was all that was available in the entrepreneurial realm at that point. I understand there's all kinds of different degrees and majors in that world now, which is super cool. So I also, former roles include being CEO of an IT services company, and I was the director at the Boise State Tech Center, which is called something else now, but it's the business incubator out in Nampa. So I've had a long history of working with entrepreneurs, being an entrepreneur, funding entrepreneurs, and I'm super excited to see programs like this for women, because I will say when I joined the local angel group, I think Meg was probably the only other woman in the room most of the time. There was maybe 3 of us. And so it's exciting to see more women being involved in entrepreneurship and funding and all those things too. So happy to be here.
Awesome. Thank you very much. Now, attendees, just to let you know, we have in the chat, we have some of the definitions. So the fun part about when you get into discussions of funding, the terms just come out. So we, I think, have a link in there to a document that has some terms already. And then as the chat goes, the other one I'm going to ask for Alessandra was equity. So these terms, you might know all these terms, attendees. That's great if you do. If you don't, we'll just be popping out definitions as they go just to help out. Meg.
Yes, well, hello, everybody. And I have to say that this is such a great panel. I have been privileged to know and support entrepreneurs in our valley with Karen and Denise for many, many years now. And so it's really fun to be able to do this virtually. And both of them bring great perspective, background. And so this is really a great panel that you've assembled, Karen.
I'm stunned, by the way, that I was when we had the 3 of you scheduled for this. It was like, oh my goodness, what am I going to do about this? Because I have too much power in the room, but that's okay. I'll deal with it.
Well, we're all very humble, so you're fine. So I've been involved in the Greater Treasure Valley in entrepreneurship and investing really since 2000, I guess, would be about the time. I currently have a business called Uproar, and Uproar is, it's about a year old. I founded it specifically to provide advisory and outsource sales and marketing services to early stage food and beverage brands, primarily those that are doing consumer product, either direct to consumer or through traditional channels of restaurants and grocery stores, et cetera. So
okay,
yes.
Just a few terms in there. So I followed you, but can you give an example? Because that is a really interesting. So we've got food and beverage, but you're not interested in restaurants.
Right.
My interpretation directly. So what would be an example of a company that you're working with?
Yeah,
that is working with you?
So any food or beverage, you can go to your local Albertsons or Co-op and buy it. Those are all brands, and we call them CPG, consumer product goods, or consumer packaged goods. The consumer packaged goods that I focus on are food and beverage. So some of the brands that I work with are Sun Valley Mustard, Zaka Hummus, SOS Hydration, which is an isotonic beverage, Direct Access, which is a coffee brand, and then Snacktivist Foods, which is baked goods, like ancient grain, regenerative farmed based baked good products and snacks. And then there's a brand called Core and Rind, and they do cashew-based alternatives to like nacho sauce or mac and cheese sauce, that kind of thing.
Oh, wow.
So my primary focus is on brands that have some disruptive reason for being. They're better for you, better for the planet, new business model that is intending to carve out, excuse me, a new way of connecting with the next generation of consumers who have grown up with different needs than baby boomers or even millennials now. So I've been doing that. That leverages my full food and beverage experience. So before launching this business, I was the CEO and a large investor in a local brand called Melt. That's Prosperity Organic Foods. I engaged with that company as an investor and board member when revenues were about 100,000, and built it over the next 7 years to about 3 million in revenue, with distribution in retail stores like Albertsons that had, we call doors. So that just means how many stores they have. So we were across North America with about 8,000 doors. And raised a lot of money along the way, which is why Denise referenced that I can appreciate the challenges in a small market like Boise in doing so. And then prior to that, I was one of the founding charter members of the Boise Angel Fund, which was the first angel fund founded in our Greater Treasure Valley, and really became more sophisticated, I guess, about what it means to be a really effective angel investor. And the best angel investors have dual interests. They want to add value to a small early company in a way that works for them, and ultimately they'd love to see an ROI, but it also is just about providing the very important needed capital and expertise in important stages, early stages for a small company. I founded a merger and acquisition company with a partner. And so we advised small businesses across Idaho who were ready to sell and move on to their next act. And then before that, I spent 16 years as an executive with Ore-Ida Foods, and leveraged my MBA from Washington State University to work there. And the brands that are best known that I worked on and rolled national are Bagel Bites. Most people tried Bagel Bites at one point, so that happened in the 90s. And I will tell you now that one of the things I engage in regularly is I'm on the Entrepreneurship Advisory Board for Washington State University's College of Business and Economics, also as a way of connecting with entrepreneurship. I will tell you that entrepreneurship is a hot trend. The younger we are, the more we want to be an entrepreneur. And secondly, people who are aged 40 to 50, kind of in their 40s and 50s, that's where the most active and successful entrepreneurs live, because they're bringing lots more personal world business experience to bear. It may not have been their first time of getting it done. They may have always dreamed to do this, or they started when they were young, or they had a business plan competition they won. They wanted to do a business, but often they get other world experience, refine their skills, and then are very successful in launching an entrepreneur.
Awesome. So there's a message for our students. You don't have to do it right away. Take your time, figure out what you're going to do, get your knowledge, and then you can come back and do it. Wow, that's awesome. I think each of you, I could just ask like one question. We could go for an hour, but probably shouldn't. So I'm going to say, by the way, attendees, if you have any questions, you can post them in the chat or as a question, and we'll get them hopefully answered. One of the things I think for our attendees, primarily students, primarily undergraduate students, probably thinking about entrepreneurship. They may be in the business school, they may not, but it's kind of, I'm going to need some kind of money to do this. What are my options? And based on your experiences, so I can give them the textbook version. We're not in class though, so I'm not going to do that. I can give them the textbook version, but based on your experiences, what do you think is the best first way to go or the best second way to go? Because these things are staged, right? It's not just we do it once and we're done. I'm a bit of an interrupter, so please, whoever wants to jump in, I can call on one of you, but you guys kind of know each other. So just jump in and go for it.
Well, I guess if you don't mind, ladies, I'll start first. It takes money to make money, and usually it starts with you as an entrepreneur have some savings. Maybe your family, friends are willing to help. But with a lot of different funding methods, you need to show that you've had skin in the game. You put some of your own funds at risk. You believe that much in what you're trying to do. And most areas of financing will not be, you will not get 100% financing. You have to have some money in. So certainly if you can be saving, that's helpful. And then I like to say that the least expensive cost of capital is your customer revenues, bootstrapping, yes, where you're not giving up equity ownership in your company. You're not taking on a loan where you have that payment and some personal guarantees where you might have collateral tied up, collateral being, personal assets that were pledged to guarantee the loan. So if you can get market traction and people buying your business or, paying for your service or paying for your product and grow organically like that. Now there comes the point in time when maybe you want to grow faster, and that's just not, you can't take advantage of great market opportunities because there's just not enough extra capital. And that's when I think you look outside and say, well, what might be a fit?
So are you typically looking for, I'm just going to throw out some words. Would you like to see that the entrepreneur has had the business going for 6 months and at least has shown an incremental improvement in revenues? It might start at $50 the first month and be $5,000 the second month or something wonderful like that. Is that what you're looking for? Some kind of time across the bottom before you're looking to suggest funding opportunities?
Well, there are some funding programs, even loan programs like SBA loans, Small Business Administration backed loans, that you could get a bank loan to fund your startup if you show you've done a lot of research, you have some experience, or your team has experience in the industry, and you have put in some of your own money and you can meet the lending eligibility criteria. So there is the possibility to not have made sales yet, still get a loan. But I think that you need to at least have done a lot of market research where there is a customer base out there. There is a demand, a need for this. I like to say you can't be the only one in love with your idea. And I don't know, ladies, would you like to jump in there?
I think that what she said, yes, for sure. But it also depends on the business, right? So in the business model. So there's no set baseline as to how long you should have been in business or how many customers you should have. It really, really depends on, again, that business model. If your plan is to blitz scale and sell it, through equity funding, then the investors or the funding sources may not necessarily care about showing profitability or showing a certain level of revenue. Maybe they're looking at how many eyeballs you've got on your website. So every business model is different, and it will influence what different capital sources are available to you. So that's kind of a really general answer. It's hard to say, but if you're starting a hair salon, that's very different. You're probably not going to get equity funders. They're not going to be interested in that, but they would want to see, you would probably be able to get some sort of a bank loan for that if, as Karen mentions, you can show there's research and experience and there's a need for that. So it really just kind of depends on the business. That's my best lawyerly answer. It depends.
That's a standard consultant's answer, right? Go for it, Meg.
Right. Well, it's true. It's absolutely true. And then the other really important consideration, and when I talk to entrepreneurs, it's one of the very first things that I ask: what's your dream? What do you really want? Well, you know, if this were to meet your needs, you know, you're founding it, why? You always have to have a why, but then what do you want? Because if what I want is to leave a legacy for my children, that's a very different business, and the way you source capital for that business is going to be different. The thing to remember, while it sounds sexy, I got investor money, wow, this is really exciting, but investor money comes with strings attached, and the strings attached are, I want to get my money back and then some before I die. So, you know, I don't want to pass this on as my legacy to my children. I actually would like to see something back. So if it's a legacy business you're creating for your family, or if it's a lifestyle business where, you know, I'm going to build a $5 million revenue company because it's going to be a cash flow king, and it's going to kick 500,000 a year to me to live on. And that's all I want. I'm not interested in taking over the world or, you know, all that. So the dream of the entrepreneur, well considered, and well researched, I think, is one of the most important first issues to be resolved before you jump forward to saying, now, how am I going to pay for this?
That's awesome. This is going off a little bit on a sidebar, but the friends and family comment. The woman who founded Theranos, she was the youngish woman. I think she got 9 million from her friends and family. And I went, I wish I had friends and family like that. Like, oh my goodness, I could have done amazing things. Anyways, your friends and family may, and it was her neighbors as well. It was like, what zip code do you live in, honey? It's total sidebar. And that's one of the things about being in Boise. I think we have a wonderfully supportive environment for entrepreneurs. Maybe not totally to the extent of being able to rustle up 9 million going door to door. We do have a couple of questions. Vlada, the first question was, what about no experience? Just you as a first-time founder. And I think we've kind of answered that, which is, depending on your business model, depending on your dream, depending on your goals, that might be okay, and then that might not be. The other part, Karen, actually, that you mentioned was your team. And I don't, if you'd like to add to anything that I've said.
Yes, it's really important to have a strong team. And this doesn't mean that you're necessarily taking on a business partner. Your team could include that if you decide to have that kind of model and relationship. But you need an advisory team. You need, at some point in time, to talk to a business attorney, talk to an accountant, because there are tax implications. The way you set up your business entity, whether it's a limited liability corporation, an S corporation, a C corporation, you need to have that advice from risk management advice from a lawyer and the tax advice from the CPA, and business insurance. I can't tell you how many times I've met entrepreneurs who didn't think about that. And that's one of your first lines of defense. Think about a food product, if somebody's sick. So those are, and your banker, because you will need a bank account, you will need to keep your funds organized in such a way. So those are a few of the advisors that I think you'd like to surround yourself with. And in the beginning, it's really hard to have the money maybe to visit with those professionals. But my experience has been you can pay now or pay more later if you don't set up the right foundation. And then there's a lot of places to get free advice, business counseling in our area. There's the Idaho Women's Business Center, the Small Business Development Center, Treasure Valley SCORE, Trailhead, which is a business incubator. Just so many places where people are willing to share their stories about how they grew a business or helped another company grow.
I'm amazed and I think it's wonderful how many opportunities there are in Boise. We actually have a slide somewhere, which I'm going to find, where, and it was actually based, Karen, on our last chat, where we had the woman that works with you who came to the chat.
Jenny Hemley. Mm-hmm.
Thank you. Sorry, I'm so awful with names. Jenny was talking about the services that they offer, and I was thinking, we have other people offering other services. How do they all fit in? And I'm sure there's many graphics, but just for us, well, maybe for me, just trying to sort out who does what when, and where best to get your resources at what time. And this is really what we're talking about today, except focused on funding. So that's a little, just a point for Miranda or Alessandra, if someone can send me that slide and I'll show it at some point.
Can I make one more pitch for resources?
Yeah.
So
yes,
I'm a member of the Entrepreneurs Organization, and it's a global organization. I've been a member now for 5 years. I wish I would have been a member for 10. The Entrepreneurs Organization exists specifically to provide peer-to-peer mentorship and expert mentorship for entrepreneurs as they build their business and go through their entrepreneurial journey. And we have a chapter here. It's been around for 14 years. We have an accelerator. So once your business hits 250,000 in revenues, and now you're asking, what's next? How do I start to put process structure? How do I manage people? How do I get financially literate? How do I learn how to take care of my cash? Because it's the most important thing. What's the difference between strategy and tactics as it relates to my business? And who are the experts, not only in our valley, but across the country and across the globe, that are specific to my industry that I can tap into? And we are really fortunate to have a chapter here. The local chapter has about 35 members. But in the accelerator program, we have 20. We have 20 local members in the accelerator, and 2/3 of them are women, which is really very, very amazing. So it's not terribly expensive to join, but the value proposition is amazing. And so any entrepreneur who's looking to build a business that's going to scale, beyond $1 million, which is a high mark for a lot of companies, by the way. A lot of companies don't ever get there. But once you hit 250,000, and if you're ready to go do the work to really refine your skills as a leader and as a person, I highly recommend it. It's eonetwork.org, and it's a great resource.
I am on the right place. So it would be this one, right? Awesome. Great. So there is a student entrepreneurs membership, and you need to have $500 in generated revenue. And I just read this like in the last 30 seconds. What a wonderful thing to say that you need to have gotten some revenue in order to join. And it just makes the entrepreneur get over that hump of, oh, I'm not sure if I can do this. Oh, just do it, and then we'll worry about it later. Awesome. Thank you so much. Love the plug, Meg. That's fantastic. We have another question about it, especially assuming our students are still in the very, very nascent stages. Their hopeful goal is to hit that 250K mark, but they haven't quite gotten there. Any advice about pitching to friends and family? Anyone want to touch that one?
Well, I can just tell you what my philosophy was. My philosophy was, when you're around friends and family and they start talking about what's going on, what's happening in your life, you always want to share what the exciting next thing is. And so my approach was always to seek advice first and worry about funding second. So I think it's really important to really kind of test the waters, see what kind of interest there is. If people are really interested in what you're doing and start engaging with you in conversations, there will come a time, and you seek their advice. I'm really struggling with this. Who could I talk to? Do you know anybody that could help me? Do you have any experience around this that you'd be willing to share? If they want to engage further, you've already built a relationship. And I think attracting the right money to your enterprise is very much about strong relationships, and you want to be aligned. So if you build the relationship first, in my experience, there will come a time when your friends or family will say, well, is there something more I can do to help you? And so they're asking, you're not pitching. And it's a huge difference of someone asking, hey, I really want to help you out. What can I do? And if you're prepared for that question, you have the legal docs in place, you know what you're doing. If it's your first friends and family raise, and we call those a seed, we call them a seed round, then you can say, well, that I'm so flattered that you really want to do more and get more involved. So that's a different conversation. Let's have that.
So start with the social capital and then move to the financial capital. Awesome.
On that note, much like Meg said earlier, think about what the end game is for your business. You really want to think very carefully before you bring in friends and family, because friends and family are hopefully for forever, and businesses typically are not. So you do want to be very realistic about the fact that what could this potentially do to my relationships if this business fails and they lose all of their money. And so, I would be very careful about taking on friends and family money. Of course, entrepreneurs are hopelessly optimistic, and we always think that our deal is going to be wonderful, and we need to be that way in order to sell that concept to ourselves and to everybody else. But I would say be very careful with the friends and family piece, just because when it goes bad, it goes really bad. And you don't want to think about that when you are getting started. But I've seen a lot of businesses where, and this isn't the same thing, but friends and family have been hired into the business, and
Yes.
that becomes a real liability too. But taking money from Aunt Betty can have some ramifications that you need to think about later on, not just in your relationships, but it can also impact your future funding sources. If those investors are not accredited investors, that's a whole different subject. But there's a lot to think about there. So I would just caution, be very intentional about that.
So should we just quickly touch on the accredited? So it was I think last fall. It's actually, Meg, I'm pretty sure it was after we met, and I was doing some research, and I went down this little trail of accredited investors because that had been a new term for me. Does anyone want to just jump in and explain what that is? I don't even want to try.
I will say the laws have just recently changed.
Oh, no.
As well. No, it's actually opened up broader opportunity for raising money from outside investors by including this idea of crowdfunding equity investor, which is different than the traditional definition of an accredited investor, which is tied to assets and income. So Karen or Denise, go ahead and jump in and you can talk about the differences, but it actually is, it's easier now, I think, to raise money from people who don't, depending on how you're raising it, who don't meet the traditional higher bar for accreditation.
Okay.
So I'll take this one because I live in this world. So one thing to understand is that all fundraising is regulated by the SEC, the Securities and Exchange Commission, whether that's private fundraising or whether it's the stock market, which everybody's familiar with, right? So the difference with the stock market is it's super regulated. So the idea behind that is that it's protecting the widows and orphans and the smaller investors, so that in theory you can't lose your entire life savings on the stock market. Okay. So that's why anybody, regardless of wealth level, pretty much can participate in the stock market. But private investing is not regulated to the same extent. And so the way that the SEC regulates that is by saying only accredited investors can legally do these kinds of investments, because in theory, if they have a certain wealth threshold, then they can either absorb those losses, or there's also an idea that if you have wealth, then you have some level of intelligence that goes along with it. I don't know if I agree with that all the time, but that's the thinking behind that regulation. The regulations go back to like 1933, I think, and they haven't been modified for long time as far as the wealth thresholds and all those. So what Meg is referring to is last year, I think it takes effect this year though. There's been some discussion for a long time to change those accredited investor definitions. And the basic definition has been, if you have a wealth, net worth of $1 million or an annual income of $250,000 a year or $500,000 with your spouse. Those are, by today's standards, actually sort of fairly low, not maybe the income, but the net worth. And there's a lot of things that go into that net worth definition. But there's been some momentum behind trying to adjust those wealth thresholds upwards to adjust for inflation and the fact that they were put in place, I think, in the 70s, and they haven't been adjusted since then. A lot of groups, so I'm involved with the Angel Capital Association, which is a national association of professional angel investors, basically. And they have actively lobbied against changing those, because if they adjust those wealth thresholds upwards, it will cut a lot of people out of the private investing that are currently now participating, which would be detrimental to all these startups that are relying on angel investors to invest at those very early stages before venture capitalists or banks or anybody else will get involved. So that's been really key legislation that the ACA has been very involved with in trying to maintain or even adjust downward. Now, I don't see them lowering the wealth thresholds, but what they've been doing is trying to introduce other measures. So you can introduce a measure. There's one around sophistication or training or certification. So if you've gotten certain licensing or you've taken certain training, then that would qualify you as an accredited investor, even if you don't meet the wealth thresholds. And then, as Meg referenced, there's been a lot of work around opening up certain types of crowdfunding to people who don't meet the wealth threshold. So that's all really technical stuff when you dive into it. And again, when you as an entrepreneur are raising money, you need to be aware of all it, and it's super overwhelming, I understand that, but you do need to be aware of all the different options to you to raise money. And we often refer to it as raising under an exemption to the regulatory laws. So if you're raising private equity, that is under an exemption to the need to publicly register your business and have it on the securities or the stock exchange. So sorry, that was a mouthful. I hope that I didn't throw up too much jargon there. I was trying not to. So Karen and Meg, feel free to jump in there.
I think that's awesome, because one of the big messages that I received from that was, one, learn a lot before you get monies from anyone. And I think that's what we're really trying to promote, is know what you're doing before you begin. And I'm going to do a shameless plug in that we're starting a certificate in the entrepreneurship realm. I don't think we have the formalized title yet. It's hopefully going to start this fall. And there's going to be a fully online version, and there's going to be an in-class version. 4 classes, do that kind of whoosh over the top, which will at least, hopefully, our goal is that when they come to talk with all of you, at least they'll be able to go, yes, I heard that word. Let me go back to that book and read up again on that. But at least they'll have that baseline of understanding. And it's going to be aimed actually at non-COBE students, so non-business students. So all of you engineers or anyone else who wants to get it. This is awesome. Karen, would you like to jump in and add to this discussion? This has been great, and I have to figure out where we're at with the questions that I had listed.
Okay, I think I'd like to talk about how to prepare to meet with a funder, whether it's a bank, whether it's an investor, even if you were trying to go to friends. I think you need to be able to articulate your idea and show that you've really thought through different parts of the business model. And so I know Boise State and many other universities teach the business model canvas, so that if that's not familiar to you as a viewer, take a look at that. But it's a great framework to be able to quickly put down ideas and say, who are my customers? What is the value that I'm going to offer them? How will I market this? What channels will I use? Sales channels. All of those, what's my cost structure? What are fixed costs that I have to pay every month? Variable costs like labor or your inputs if you're making a product. So I think it's important that you visit the business model canvas as a precursor to a business plan that some funders will ask for, which is a more formal document. And that you get familiar with creating financial projections or forecasts or budgets, because you need to be able to explain to a funder what you think your revenues will be, your sales, how you arrived at that, how many customers buying this widget each month, each year. Oh, great, thank you. And so there's a spreadsheet that you can create in many different organizations around here that help entrepreneurs have great templates that you can use. But it's just really important to show how can, if it's a bank loan, how are you going to pay back that loan payment each month? If it's an investor, how long is it going to take you to hit certain revenue targets? To what's your burn rate, which is a term about how much cash are you, but before you're profitable, how long does it take to get to profitability, and how, your marketing strategy to get there. How are you going to acquire these customers, and at what growth rate? Why does that make sense? And I think the business plan also will address, it isn't so much on the canvas, but, talk about industry trends. Is this a growing industry? Is it a changing industry, really pivoting in some way? What's the economy doing right now, and how's that going to impact your business? You have to have that full big picture of the space that you're operating in. So that's my push for getting ready.
I think
a bit.
One of the big things was always with us was what you called the burn rate. We used, what's your monthly net? What money do you need in order to be able to pay your employees every month? And this would not only be with entrepreneurial firms, but even firms that were at a good stage and then wanted to grow up to the next stage. And, we're going to hire 10 people and then we'll get all these projects. And we tended to live in the IT world, so either software, IT consulting, things like that. And just getting the business owners to understand, our phrase was, only cash is cash. So that's the only thing you can count on. You can't count on accounts receivable or future customers or anything like that. You can only count on the money that you actually have. The business model canvas, I think, is awesome because it's a nice snapshot. And I think it's very easy, I would assume, for you as potential investors to take a look and see where the holes are. Do you want to talk about, I'm just looking for the dirt. So what are the most common holes that you've seen in? And if you do look at full business plans, to me, this would be step one, just kind of as you mentioned, Karen. If the entrepreneur can't get this down in a reasonable format, you probably aren't going to read the 40-page document. So let's start with this.
We can talk about common mistakes, and anybody can Google this, common mistakes VCs see, venture capitalists see all the time. And some of those are, you don't carefully detail the assumptions around what's driving your revenue, what's driving your cost, and how quickly you get to profitability.
So could we?
They're just numbers on a page, but there's no assumptions that say, okay, and Karen mentioned this, but your assumptions are even more important than the numbers, is that those assumptions can be vetted and validated and make sense for the industry. Because when you're talking to someone, whether it's a banker or somebody who wants to invest in your business, or Sage Growth Capital, which is a revenue financing model, the questions are going to be, do I have confidence based on my experience in that industry or in that business that those assumptions are sound? Because if the assumptions are wrong, none of the rest of it matters. So that's the most important thing. Second is we see hockey stick all the time. We see,
Sorry, I'm Canadian.
revenue.
So that means this,
exactly.
the nice,
well, and
the nice
the issue with hockey stick is it's a cash eater. So,
Yes.
growing, 2x every year has a huge cash demand. Whereas you might be better off to be growing, 10% a year or 20% a year, because you have a clear way to manage the cash you need to invest in the business to assure you get that. The next thing that we see is that there's no conversation about what the true competitive set looks like, and there is a naivete around what my competitive universe is. It may not be, hey, I'm going to have a 90 share of this little niche, specialty, widget that only I make and 10 people want to buy. I mean, who cares? But the competitive landscape is whatever your product is going to substitute for, or your service is going to substitute for. So thinking about it broader, not narrower, is important for sure. And then lastly, there's no evidence at all that you've ever talked to any prospective customer or current customer. You have no idea. Not only are they interested in it, is it something they'd be excited to learn more about, but are they willing to pay what you have to charge to make any money? Those are the biggies.
So, you're speaking my language. So I teach an MBA class, and the first thing we talk about is an assumption. What is the assumption? And it's a lot of people I don't think realize that they are assumptions. So an assumption is I'm going to grow 5% year over year. And the question that should come back is why? Why will it be 5? Why won't it be 1? Why won't it be 25? So what is the base for that? The market size. I saw one great business plan, and it was for beach bags. And it said women will buy beach bags, and there's this many women in the US, so we're going to get 1% of the market. It's like, wait, how many women live near a beach and need a beach? It was just, so the whole concept of assumptions. Karen or Denise, would you like to jump in there? And or the competitive analysis? And what was the last one, Meg? The last one. I was trying to write down at the same time. I was
talking to your customers and understanding, not only are they interested in what you're offering, but what are they willing to pay? Because they may love it, but they don't want to pay for it. And then you don't have a business.
Yes.
So to tag on, sorry.
No, that's okay. I was just going to say, I'm just laughing at the magical 1%, because that is something that you hear in funding all the time. Oh, if I just get 1% of this market, then I'm set. And we hear 1% and it's like, oh, okay, this person doesn't know what they're talking about. So go ahead, Karen.
It is true though, because it does seem like a very arbitrary number, and it still begs that question of why. Why would you even get that 1%? Yeah, go for it, Karen.
Well, I was going to say, tagging on to what Meg said, and she said, are the customers willing to pay the price you have to charge? Let's talk about even setting the price. Have you done a break-even analysis? Do you even know if it's a product, how much it costs you to make that? And I don't mean just raw materials. You have to think about, the labor and everything. And because I have worked with clients who said, I'm not making a profit. I need a great marketing strategy, Karen, so we can just sell this everywhere. And then when I sat down and talked to the client and said, well, let's look at your pricing structure and everything, it's not a marketing problem so much, because let's say we had a great campaign and we had 100,000 people that bought this thing. If she's losing $1 on each product sale because she doesn't really know the true cost of it, you aren't going to make any money. So
you're getting more customers is actually going to sink you quicker. That right. is and it doesn't seem reasonable. Economies of scale theoretically work. Economies of scale meaning it might cost me a ton of money to make one of these, but if I make 1 million of these, it'll cost me pennies. So the more I make, the cheaper it'll get, theoretically. That only works in certain cases, and especially with a lot of our service businesses, there really is very little, if any, economies of scale, because there's a human being that's delivering that service, and the more you hire, you can't pay them less. So it actually doesn't work that way. Awesome. We have, in some of our classes, we run simulations. And one of the simulations is selling cameras. And you get to set the price, and then the market responds. And invariably, there is one group who sets the price really low, and they're just ecstatic because they, they sold out. But then it's like, but why are we like 300,000 in the hole? It's like you're losing $100 in every one. Sorry, Karen, did you want to jump in again? I thought I saw you.
All of the things Meg mentioned are things that I saw as a banker. Lack of assumptions, no reason to explain, how they arrived at that number. No research to show that they had actually talked to people, again, to find out what they wanted. No industry research, unaware of maybe some new law changes in the law that might impact the way they could sell, or let's see, really just not doing your homework. It all comes down to that, not willing to put in the time. It's work to try to plan, to get advice, and just, we all want to see our dream come true, but we can't live in the dream world. We have to look at, the realities of things. And really, we also have to be willing to, and I'm going to share this phrase we used to use at the bank. As an entrepreneur, you have to be willing to have someone tell you your baby is ugly. Your baby is this business model, this product, this service, and you really do need to get advisors to poke and prod. And while it may feel like arrows hitting you right now, that you came up with this great idea and people are saying it, it has these flaws, it's really important to have that feedback so you can revisit things before you go to a funder. You really want to be prepared. You really don't want to come up looking like you just woke up with this bright idea today and you've done nothing about it. You're going to burn your bridges, because then later maybe you go back and you do your research, then they already lost some confidence in you. So just spending time to really do that research, get feedback, run the numbers. If math isn't your strong suit, get someone on your team who can help you with figuring out your break-even point and those kinds of things. But it needs to be done.
I think those are awesome points. The competitive analysis, and just going back to that one, and I realize we've gotten off the funding a little bit, but we're trying to get them, we're trying to help our attendees figure out how to create a business model that's viable, that actually could get money. Some examples of, I don't want to be totally biased, but so for me, competitive analysis, for most companies, seem to be a difficult thing for them to do broadly enough. You're talking about the substitutes. So if I want to open a new coffee shop, and honest to goodness, I don't understand how all these coffee shops exist. I do like my coffee, but I am more of not a $4 per cup kind of person. And there probably is space in the market for another coffee shop. I'm sure there is. Once COVID's over. But talking about substitutes and how you would do a competitive analysis for it, and or some other example, I'm just trying to get some of your wisdom out regarding what you feel, or again, some of the common issues with the competitive analysis. I might have been too vague. I was trying not to be too focused.
I think, earlier Karen mentioned the business model canvas, and that's a really useful tool for that kind of an exercise. And the whole idea there is to get you out of your own head and to get you talking to actual potential customers. And you'll learn a lot about that when you talk to them. Things will come up that you maybe never thought about. You're thinking in terms of coffee because that's what you want to do. But when you start talking to real people, you find that there's a significant portion of the population that hates coffee and would never touch it. But they might drink matcha, or they might drink, I don't know, that nasty kombucha stuff or whatever. But, there's obviously I'm not a kombucha drinker, but I think that's one real power of the business model canvas approach, is that you don't, you get outside of your own sort of, echo chamber and talk to real people who might be able to help you, find what those are. And that's a really powerful way to go about it. That's my 2 cents on that one. I think that's one of the reasons why I really like the business model canvas, is it helps shake that up, and you find people that will tell you your baby is ugly a lot sooner, preferably before you spend a lot of money on it. So that's one approach for sure.
There's an expression, fail cheap, fail fast, and that's what you want. If it really isn't going to work, find out early before you spend, way too much time and money on it.
My other comment is, as a small startup, early stage company, you don't have market impact. You're not big enough. So a failed strategy usually is, I'm going to deliver the same experience, but I'm going to sell it for less. And the reason that doesn't work is because you don't have the scale. You don't have the ability. You can't out Walmart. It's just not going to happen. And even if you're a service company, like doing a local consulting business or a professional services firm, and you're one architect, you're not going to out service delivery everybody else in the market and charge less, because price is your only competitive advantage. Price should not be your competitive advantage unless you're developing a disruptive technology-enabled replacement of a current delivery of a business model. Then price is a huge benefit. But if you're just delivering a similar experience, service, product, and you think you can commoditize it, there is a belief in, and that's been documented, that every new product or service category ultimately moves toward commoditization over time as the big players get bigger and they can drive down their costs. So that you just take it off the table is what I would say. If you're talking about, and we're going to be less expensive, just take it off your mouse, wipe it off your sheet. And what you should be saying is, and we're going to be charging differently, or we're going to be charging more, or we're going to bundle services differently than the way everybody else bundles them, because we have something unique to bring to the table. So think about what's unique that you can build and deliver, because you're hearing that consistently when you go talk to your customers and they're saying, I'm really happy with this, but there's just this one thing. And so you want to have a differentiated reason to exist when you create a business, regardless of, the size. I mean, whether I'm a plumber, why do we need another plumbing company? Well, we're growing really fast and we don't have enough plumbers. Okay, well, how are you going to get people to try your plumbing company now, just because you have journeymen and apprentices who now are ready to go to work? What is different about you? Is it service? Is it, no contact? Is that, I leave it better than I found it? Figure out what your customers are unhappy about, or not, it's just okay. It's an average experience, but boy, it could be really great if it was this. And if you can do it and price up in a bundle to deliver it, so it's not clear that you're taking a price increase versus the market, that's how you get margin, and that's how you make money.
Awesome. This is going to be this session. Thank you so much. This session is going to be required viewing for, I think, every course that I teach from here on end. The range of topics was awesome. And I love the focus on the business model, because without a good business model, funding is irrelevant, right? Nobody's going to listen to you. You have to know what your business is and why as you're saying someone would be actually willing to part with their money and give it to you. And until you ask people to do that, you don't understand quite how that transaction happens. So way to go. We have, I'm going to give, by the way, just we're right at 1 o'clock, so we're going to end pretty well now. We have Lori Lemon, who just joined us from NABO, which is the National Association of Women Business Owners. Yes, and so Meg, I must admit, I didn't know we had an EO organization locally. I don't know why I didn't know that, but I didn't. But as part of our Women in Entrepreneurship thing, we are going to be offering some memberships, some student memberships to NABO for the coming year. So if actually Miranda or Alessandra, if you want to put in the link for everyone where they can click in. If you are not a woman or you are not a student, please still fill out the form. We have other options for you to gain something from attending these sessions and just being part of our community. But I'd like to get Lori to jump up. Good, thank you, Miranda. But last words from any of you three? Any shameless plugging that we need to finish off with?
Well, I'll start.
I don't have shameless plugging, but I would just say, when you're ready to go out and figure out how much money I need to grow the business and what are the best sources, please reach out to experts, reach out to people who have done it before, because one bad mistake can be the end. I mean, it's that serious. I can tell you a client that I've been talking to that's not in Idaho, outside, young entrepreneurs, great product, huge traction in the marketplace, but in their second year, as they were pushing the revenue to about $250,000, $300,000, and it was a start in the farmer's market, then go online, do Amazon, all that, and they took from an investor $150,000 for 49% of the company.
Oh.
And when they told me that, I went, what would possibly possess you?
Why did you do that? At least it wasn't 51.
Almost half your company for 150,000 when you'd already, your valuation of your business should be, 1.5 to 3 million when you already have sales traction, you're online, you got local grocery buyers. I was shocked. And their answer was, well, we really needed the money. And it's an honest answer, but it just shows being illiterate in this area is very, very risky.
Incredibly costly. But you just think now, future investors are looking at that and going, oh my goodness, what is happening? And by the way, everybody, these women agreed to come today and speak with us. So accessibility is not an issue. Denise, jump in.
Yeah, what Meg said, we see a lot of people make mistakes early on. So, and as Karen has also said, just educate yourself. There's a lot of resources out there. Accessibility is not a problem. That is one thing that is great about this area, is you can always get one meeting at least once. Don't waste it. But yeah, there's resources out there. There's a lot of information available. Spend the time and understand it. I get applications all the time from people that have no idea what kind of funding I do. That's really annoying. Read my website, it's out there for a reason. And understand what kind of funding the people that you're applying to do and what their areas of interest are, because that's the quickest way to turn them off, is if you don't know what they do in advance and you expect them to educate you. So take advantage of the opportunities that are out there, and just again, remember that there's a range of opportunities and a range of kinds of funding, and don't get stuck into one, just because somebody told you you should.
Or somebody's got a check. That is the check is a challenge.
Yep.
Karen?
I would say to talk about education, besides meeting with so many different groups that offer business counseling in the area, read Entrepreneur.com, read Inc. magazine, read Fast Company. They have lots of free articles, Forbes. So you can read about angel funding, venture capital. You can read about the 5 C's of credit to getting a loan, and Google that if you don't know that. Really important before you visit a bank. Or I'm happy to talk with you about that. But just be immersing yourself in business news. If this was not your major, that's fine. Lots of great successful entrepreneurs did not have a business major or formal education in business, but it doesn't excuse you from being a lifelong learner and, doing what you can to supplement the knowledge that you might not have received in your formal education.
Awesome. I do have one question from Miranda, which was, any internships available? So just in case anyone wants to offer any internships, I think we'd have lots of incredibly eager people to join you. So, hey, we got to give her credit. She's looking for the opportunity, right? We'll take it. Okay, with your leave, I'm going to promote Lori from NABO to be one of our panelists. I'd love you to stay, but if you don't want to, you can leave. We're just going to be doing a little bit of a left turn right now, talking a little bit about NABO. There she is. Hello, Lori.
Hello, how are you?
Good. How are you? You're somewhere warmer than we are, boy.
I am. I live in the Atlanta, Georgia area, and we do have 72 degrees today.
Oh, son of a gun. I think it was 36 this morning. So we're it might be warmer by now, but we're still actually in winter. So Lori, the reason we invited you is that we are offering some free memberships to our attendees to NABO, National Association of Women Business Owners. Mm-hmm. I actually got the acronym right. That's a good thing. And just wanted to give you the chance to tell our audience what's in it for them and why they'd be interested.
Absolutely. Well, thank you first. I'm thrilled to be here and thrilled to be with you all and even hear the end of your program. Such valuable resources and advice, which is fabulous. I am part of the NABO HQ team, if you will. We're a very small team, but we support a very large national organization. And I think it offers a lot of great things to students. We call it our next gen category of membership. But I mean, NABO is a women's business organization. And I think the neatest thing to me anyway is it's going on, we're just starting our 46th year. So we've been around the block a bit. And when NABO was started, there were not as many opportunities out there, frankly, for women. And so one of our founders said, if you can't get a seat at the table, start your own table and invite other women to join you. And that's definitely what we've done. And so we've grown to an organization of 50 chapters across the country and expanding. We definitely have a virtual chapter, which if you end up being a NABO member in Idaho, that you would be part of our virtual chapter. And again, the benefits of a national organization with a local feel. And what I think it provides, one of the women business owners who I work with most closely said, it's not a networking organization, really. It's a community. It's a sisterhood. And you'll find if you join groups that provide you support and resources and community, business will come. So that's what I really think NABO offers. And you may say, hey, I'm exploring entrepreneurship. I don't have my own business yet, but I'm thinking about it. Well, you've got a lot of women business owners across the country to draw on for experience, for questions, for areas of expertise. And you can come in as a next gen member. And again, you would have access to programming we do once a month for the virtual chapter, if you will. Again, women across the country who don't have a local chapter. but also we're doing next gen programming. We know that we want to provide some exclusive programming for students, primarily college, graduate school. Some may be just out of school and starting their own business. A few exceptional high school students already have their own business. So we're providing quarterly virtual programs. Our first one is going to kick off on March 23rd. And it's all about dreaming out loud, creating a vision board. So, you know, take a little spring break, quote unquote, from your studies and think about everything from your potential business to your life, to your priorities, et cetera. And we're going to have a real fun session, March 23rd, 5 to 6 p.m. Eastern time. And there is no cost to it. So we would love, whether or not any of your students decide on NAWBO, which we hope you will, and we hope you'll join us. But we'd love to have you sign up for that. I'll be glad to provide information.
Awesome.
So,
that would be fantastic. I think that we were talking a lot about the big picture in the talk, I think before you joined, of what do you want your company to be when you grow up? Why are you starting this company? What do you hope to leave at the end? And whether you want to be create a unicorn company or a lifestyle company or a legacy, whatever it is, knowing that on the way in will certainly influence the outcomes. That is awesome. So everyone check out the NAWBO website, which I'm pretty sure is actually nawbo.org, right?
It is, absolutely. Yes, please look at our events. We have national events, and we do have, I'll mention, a Next Gen track, which is a conference October 5th and 6th. So 2 days of programming exclusively for Next Gen members and non-members in that category. So we're just putting together content, but we had a fabulous program last year, and we encourage all to consider that as well. We're thrilled that you're budding entrepreneurs, and we'd love to have you be a part of our organization and be able to provide you support and resources along the way.
Awesome. I think the mix in Boise, from my perspective anyways, it's a really rich environment for entrepreneurs. I think there are a ton of resources, but I think having that just broader view as well, the national view and what's going on in other places, getting that local and national, and hopefully we're talking about some international programming in the fall, even broadening out and beyond. Keeping those different layers of perspective is always important when starting a business. Okay, we're coming up to 1:13. Thank you all so very much, Denise, Karen, Meg, and Lori. You guys are awesome. This is such a fantastic session. When I talk with people like you, I actually wonder why I get paid to teach classes, because, oh my goodness, you guys should be doing it all. Thank you so much. Really, really appreciate your time and your expertise. And I hope I can call on you maybe next year. So you might get a further email in the future. Okay. Thank you all very, very much. And we'll say goodbye.
Thank you, Karen. Thank you for having us.
Thank you.
Bye.